Well, final few hours of trade for this day and for the week. But what a week it has been. Good afternoon and welcome to MidCap Radar live from the CNBC TV18 Motilal Oswal studio. I am Vamakshi Dhoria and with me is Vivek Iyer. Well, Vivek, it has been an incredible week so far as news developments around the tariff situation is concerned. Yesterday, we were looking at a positive news flow, but today it's been, not so good, especially for the Asian markets. We're still holding relatively better as compared to them, and the mid-cap end of the markets as well doing quite well.
That's right. Good afternoon, Vamakshi. Absolutely right. So we are starting off the June series on a slightly subdued note, especially as far as the Nifty is concerned. But remember, the May series, despite all of the news flow, managed to hold on with gains. We have quite a lot lined up on the show, a management interaction as well. So let's start off with the top headlines. Stocks trade soft after a U.S. appeals court stays a ban on Trump's tariffs. A stalling of U.S.-China trade talks doesn't help matters. Metals, utilities and retail are the big losers, even as industrials manage some gains. Mid-caps fare relatively better.
Suzlon jumps over 8% after a stellar fourth quarter, reports a 73% uptick in revenue while profit rises multifold year-on-year. Management tells CNBC TV18 that they're expecting 60% growth across all key parameters.
Pharma stocks in focus after their Q4 numbers. Alchem Labs under pressure after management says they see high single-digit overall revenue growth in FY26. Wockhardt reports lower losses while revenue and profit for Concord Biotech surge.
An operationally weak Q4 drags Amara Raja, profit down 30% while revenue declines 5% as compared to last year, stock down nearly 5%.
Mazgaon Dock falls over 5% on a sharp decline in profitability impacted by significantly higher expenses and margin contraction. Welcome to MidCap Radar. Well, especially in the last 15 to 20 minutes of the session, you've seen a very sharp spike as far as the entire PSU banking pack is concerned. There is a Money Control article indicating that there has been some progress, especially as far as the divestment of the ITBI is concerned. And post that particular news break, you've seen a sharp surge across the entire PSU banking index. So if you look at names like SBI, PNB, Bank of Baroda, Canara Bank, even the other smaller names like Union Bank, Bank of India, all of these stocks and all of these banks trading near the intraday highs. But Hormal is standing by the wall. He has a list of all of the top stocks in the broader end of the markets that are making all the moves.
Well, there are lots of them, and especially since it's a Friday, so there's no devoid of any Friday fever, if you can call it that. There are a lot of movers in the gaining side among the broader markets in today's trading session. Look at LG Equipment's BSE continuing to make new highs every single session, 7% higher on that stock. RR Kabel too, now at the highest point of the day, 8% higher now on that stock as well. The earnings reactions are categorized into two buckets today. We'll take the positive ones first. Suzlon is off the day's high, still holding on to gains of 9% after some very strong management commentary. On the flip side, Gujarat Pipavav is at the day's high, 11% higher on that stock. Engineers India, very strong operational performance, 6% higher here. And Wockhardt, Ekta was mentioning that losses have narrowed, and that too is up 8% in today's session. On the flip side, the negative earnings reactions, of course, led by Mazgaon Dock at 6.5% lower. Look at Ola Electric with targets going to as low as 30 rupees. Welspun Living, SJVN too at the lows of the day. Some of the newsmakers in today's session, of course, we are counting down to earnings from Vodafone Idea today. That stock is down at the lowest point of the day. Deepak Nitrite too at the day's low after the downgrade that came in from Motilal Oswal. On the flip side, look at Manappuram and Muthoot, the surge that they have seen after the Finman recommendations. Muthoot now is up 7%. We'll hear from the management shortly as well. And lastly, stocks that are doing well on the volumes front. And look at Concord Biotech, Tata Investment, Nuvama Wealth is up 4%, and all of these stocks gaining on very strong volumes. Back to you guys.
Well, thank you so much for that, Hormaz. And just to add to your list, LG Equipment is one such at the counter. They had reported the numbers on 28th of May. The stock didn't do much, but today the stock is up almost 8% on the back of very strong volumes. Apart from that, when we look at the stocks that have managed to hit an all-time high, pull up the chart for BDL as well. The stock has been doing quite well today as well. That stock is trading with a gain of almost 3.6%. But let's welcome in Hemen Kapadia from DR Choksi Finserv for a technical check on the market. Good afternoon to you, Hemen. I'm Vamakshi. And, I'd just like to understand from you, where do you see the markets go from here on? Because yesterday it was a good session. Today, again, we're down and out.
A very good afternoon to you, Vamakshi. Thank you for having me on the show. It's always a pleasure. 3,350 points has been the move for the Nifty from the lows, Vamakshi. So frankly speaking, it's tired, it's overbought, and it's corrective. Having said that, there have been four gaps on the upside. None of them have been covered. So I would say the markets are resilient. The VIX is still at 16 and a half. Below 15, I think we'd see some more action by the bulls. So frankly speaking, currently we're in a range between what 24/7 on the downside and 25/100 on the upside. So we remain over there. Stock specific, there are a lot of movements happening every other day. So Nifty still needs some more time to recoup, maybe consolidate some more. Bank Nifty, on the other hand, seems set to make a move, but only above 55,800. So as of now, markets are in suspended animation. I wish we had a more significant time price correction, but anyway, that's just visual thinking.
Absolutely, Heyman. Good afternoon to you. Individual stocks, what's on your radar? All buys, or do you have a sell mixed in there as well?
A very good afternoon to Vivek. No, no sells. Markets like these, the undercurrent remains positive. So buys. Firstly, a buy call on Godrej Properties. The stock is quoting over the 55-day exponential moving average. The daily as well as the weekly oscillators are in buy mode, supporting the move. A further upside seems like a distinct possibility. One can buy Godrej Properties at 2240, stop loss 2190, target of 2340, risk reward ratio 1:2. Secondly, there has been a lot of movements in PSU stocks. PSU banks are something which were lagging. I believe the movement could have started today. So it's safe to go with the big daddy of PSU banks. I have a buy call on State Bank of India, Vivek. One can buy State Bank at 805, stop loss 780, target 855, high top, high bottom, above 55-day moving average, oscillators by decent period of consolidation, setting the stage for an up move. Vivek.
Well, thank you so much for that. So keeping an eye out on Godrej Properties and SBI, you have a buy call on both of these counters. But as we slip into a short break, we're excited to unveil our brand new global business news channel, the all-new CNBC TV18 Prime, bringing you insights from policymakers, business leaders and economists shaping both the world and India's future. CNBC TV18 Prime decodes global shifts and their impact on Indian businesses, giving you unparalleled insights. Tune into CNBC TV18 Prime at 12 noon for the Global Reset and Global Lens at 8:30 p.m. Welcome back. You're watching MidCap Radar on CNBC TV18. Let's put the spotlight on Quality Power Electrical Equipments. The company reported a mixed set of Q4 numbers. Profit and revenue growth came in very strong, while the margins contracted sharply due to higher cost of materials. We are now being joined by Bhatnidharan Pandian, who is the Joint MD and Whole-Time Director at Quality Power Electrical Equipments. Well, good afternoon to you, sir. At first, I'd like to start off by asking you about the kind of growth you're penciling in for FY26. The growth in FY25 stood at 12%. You have an order book of around 750 odd crores. How much of this gets executed in FY26?
Very, very good afternoon, ma'am. Thank you. Thank you for having me on the show. Our revenue guidance for the year is between 700 and 800 crores that we have already committed on the earnings call. The margin shrinking is not so much as what is shown. We have always had the issue of IFRS and IAS 29. Some of our earnings from our Turkish subsidiary are classified under other income due to the hyperinflation formula, where the price variation clauses are treated as other income rather than the operational income. Otherwise, the margins are more or less stable. We have made an excess of about 101 crores in profit after tax this year. We believe the growth is going to be solid this financial year, considering the headwinds, the tailwinds in the sector. The 750 crores order book is the unexecuted order book as on date, is just 2 months into the year, and we believe the year we have a lot of more positive surprises coming up.
Okay. Mr. Pandian, we get that point. When we're looking at the export order book, especially in the first half of the last year, it was at over 70%. Where does it stand at currently as a part of your total order book? Also, are you seeing any further uncertainty, especially given worries around tariffs? Also, you have a significant presence as far as Turkey is concerned. Are you relooking at that particular partnership as well?
The subsidiary, what we have in Turkey, is over 15 years now. We have business there, but it doesn't serve Turkey alone. They serve across the world. We serve in Australia, in Africa, in Middle East. Amount of direct exposure we have to the government, Turkey and India is close to negligible. Going, I believe it will be even smaller because of the kind of growth we are seeing in the renewable energy sector across the world. With regards to exports, I believe the blended numbers, because Mehru acquisition was done in March of last year, so which means we couldn't take the consolidated numbers. Going forward in the Q1, Mehru will be consolidated with us. We believe they did about 250 crore plus of revenue last year. So they are primarily a domestic vendor. As we are increasing their export share, we believe we should be about 50-50 in domestic and exports. But our export books are quite well. We are one of the very few players across the world who make this equipment. So we are seeing a lot of traction, including we just got a contract out of Hong Kong, a one-year contract with the local utility, the CLP.
Sure. And, if just talking about your order inflow, right? You mentioned earlier that you were expecting some surprises this year. So could you quantify for us? What is the kind of order inflow you had in FY25 and what would it be in FY26? And what is the demand situation looking like on ground? Are there any sort of delays, concerns, as Vivek was just asking you?
The pressure right now for most of the high voltage equipment manufacturers across the globe has been on the capacity. The demand is ready to pay a premium for capacity and delivery. Most of the HVDC projects in the world are coming up very, very fast. National Grid in Britain, which is the British power grid, equivalent to power grid of India, released an order for 59 billion pounds a couple of months back. And that is the kind of numbers we are seeing in most of the utilities coming up in the next 2-3 years. So it will be an execution challenge for smaller vendors like us to be able to ramp up our show. So I believe it's more of an execution side worry rather than an order side worry. We could ramp up our order book how much ever we want if we have a capacity at this moment.
Okay, Mr. Pandian, would you be able to quantify two numbers for us? Number one, the order prospect pipeline. You gave us an example of British equivalent of India's power grid. You've also given us examples of various capex that's been done across the world. So what is the order prospect pipeline, typical win ratio for you, and what are you penciling in terms of order inflow for FY26?
We believe we should be able to tag along another 500-600 crores of order again over the 750. I think that would be a conservative estimate if we win some of the HVDC jobs that are on the pipeline. Plus, again, the high voltage transmission sector, where we have a significant exposure with Meru, that is also increasing. And the STATCOMs and the SVCs we are delivering, we see an upside coming up with the metal prices soaring again.
Sure, and you just mentioned that capacity is a constraint, but you have two coming up, one in Cochin, which will be operational by November 2025, and one in Sangli, which will be operational in Q2 of FY27. So what is the kind of revenue potential that you see from these new capacity additions? And this is what I'm asking you about is at the full utilization of the capacity, and what will be the margin kind of contribution that would come through in FY26 and FY27?
The peak capacity output of these two plants would be about INR 2,000 crores, give and take, which we believe would be suffice for the next 2-3 years till we are able to execute the orders that may come in. With regards to margins, because we have some blended margins coming up, that means we are consolidating Meru and some of the M&A opportunities that we're looking at. So the blended margins we are giving in around 15%, but on the existing product side, I think it should be higher than 20%.
And when will you be reaching the peak utilization for both of these facilities? How will they ramp up?
We have a 9x capacity addition that is coming up in the next 1 year's time. I believe it will take about 2,000 odd people that we need to take in to ramp up the numbers. If we are able to ramp up on time in process, I believe in 3 to 4 years' time, we should be able to get the peak capacity.
Mr. Pandian, you spoke about a 2,000 crore capex. Number one, how are you?
The peak numbers that can
Understood.
The revenue.
Okay, got that. So what is the capex that you have penciled in? How are you funding the capex? Internal accruals, or are you raising debt? And typical asset turns for you?
We are not raising debt. The promoters are infusing the money through the OFS, whatever we raised. We have done a repo plus 0.5, what we say over a period of 15 to 20 years to ensure that our current cash in the hand, we are sitting in over 150 crores of cash. We do not want to put it in capex cycle at this moment where we see some interesting M&A opportunities. So we are using the company accruals and the profits for growth cycle at this moment. The asset we are putting in as a soft loan. So we are not raising any external debt at this moment.
Sure, and with the kind of capacity addition that you will do, there will be some expenses that will be involved in setting up the facilities, bringing on the manforce, and then sort of scaling it up. So, do you think that there could be some pressure on the margins in FY26 and 27? The period within which these facilities will ramp up, because historically, when I look at your numbers, your margin, your EBITDA margin has ranged between 12 to 13% typically, and this time around it's spiked up to 19%. So, will you be able to sustain this, or can we expect some pressure?
The margins are more or less constant, ma'am, for the past 5, 6 years. But when we shifted from a in-GAAP to Ind-AS during the IPO, we had to, classify a lot of our operational income under other income, especially of the subsidiary. As we try scaling up, either through organic or inorganic, the margins may be what we say slightly varying, maybe a couple of percent here and there. But I think on the sum total of what is a magnitude, I think that will be a addition. So what the PAT would continue to increase.
Right. Mr. Pandian, one question. You've gone ahead and constituted a task force to explore acquisitions. Could you give us a sense of the size of the acquisition? What will be the targeted entity? What will be the business that they are in? And how will you fund these acquisitions if you manage to go ahead and come to a fruition?
So at what we say at cash and bank, we have at this moment about 210 crores, give and take. What we say with more being generated every day. So I believe with the promoter OFS, we would be able to fund something in the range between 300 and 400 crores. That is a kind of war chest we are sitting at this moment. With regards to what we are seeing synergies, we look at high voltage electrical equipments. We are looking at, again, stuff in the power sector where we feel that we can have the same customer. The CAC is almost zero, where we can sell it push through. We are quite excited on the power electronic space, especially on energy storage. We are looking at a couple of companies, again, in the Western markets, primarily because those technologies are not available in India. We are also trying to partner with other similar like-minded companies where we can look at co-acquisitions wherever it may be.
Right. Thank you so much for joining us, giving us a sense of how FY25 panned out and what we can look forward to as far as FY26 is concerned. Thank you once again. Well, as we now slip into a short break, here's some good news for our viewers. India's business news leader is now just a click away. Introducing CNBC TV18's all-new app. Get instant access to breaking news, in-depth articles and financial world updates at your fingertips. Download the CNBC TV18 app now from the Apple Store or Google Play Store, or just scan the QR code on your screen.
Welcome back. You're watching MidCap Radar on CNBC TV18. Well, a whole host of pharma stocks are reacting to their Q4 numbers. Ekta is here with us, and she will tell us how the numbers have panned out this time around. Good afternoon, Ekta.
Thanks very much for that. So I'll start with Orchid Pharma, which is in focus post its numbers. It has been under pressure for the entire week. Nuvama had written a brokerage note on it a couple of days ago. They said that the base business price pressure led to muted FY26 guidance. They've cut the target price to 990 rupees. They've maintained a buy. Alkem, the company is guided for high single-digit overall growth in FY26. Margins should be flat in FY26, so that seems to have disappointed the street. And they've guided for, however, double-digit growth in FY27. Wockhardt, there's a turnaround year-on-year with around a 6% growth and lower losses. So revenue is up around 6% year-on-year. Margins 9% versus an EBITDA loss year-on-year, and a net loss of 25 crores versus a net loss of 169 crores year-on-year. Moving to Concord Biotech, that one is in focus on account of numbers. Revenue up 35%. Margins have expanded 200 basis points year-on-year, and a profit which has jumped 48%. Lastly, Shalby. It was a disappointing set because the margins came in at around 7.9% versus 16%, and there was a loss of around 7.8 crores, and this is versus a profit on a year-on-year basis.
Well, thank you so much for that, Ekta. Surely keeping an eye out on all of these pharma names. But moving on then, let's put the spotlight on some gold financiers because they have been doing extremely well in today's trading session. There was a post from the Finance Ministry on X, the draft guidelines on lending against gold collaterals issued by the RBI have been examined by the DFS, that is the Department of Financial Services. And here are some of their suggestions. They have asserted that the requirements of small gold loan borrowers should not be adversely affected. What they've also added that small ticket borrowers below rupees 2 lakh should be excluded from the proposed directions, and this brings relief to some of these gold financiers. Now keep in mind that for Muthoot, in their Q4 con call, they've given up a breakup of their AUM. So below 50,000 rupees, accounts for almost 13% of their AUM. For ticket size ranging between 50,000 to 1 lakh, it accounts for nearly 15% of their AUM. And overall, when we look at Muthoot, over 60% of its loan book has a ticket size below 3 lakh. As far as Manappuram is concerned, in their conference call, they've highlighted that almost 85% of their loan book has a ticket size below 5 lakh rupees. Now, this ensures for both Muthoot as well as Manappuram that the adverse impact on loan growth due to these LTV guidelines are minimized. Therefore, that bodes well for these companies. And another suggestion that also came through is that the guidelines will need time to implement at the field level, and therefore they've proposed to delay the implementation of guidelines to January 1st, Vivek, and that is the reason why all of these counters, including Muthoot as well as Manappuram, are surging in trade.
Well, thank you so much, Vamakshi, for that. The entire pack, so Muthoot, Manappuram, and also remember IIFL Finance, that too has a gold loan portfolio. So IIFL Finance too today doing quite well in the session. Well, one stock that I've been tracking is Suzlon. Earlier today, we also had the management, and this was post their Q4 results. So what actually transpired as far as Q4 was concerned? The company managed to end Q4 FY25, that is the last year, on a very, very strong note. Strong deliveries of 573 megawatt worth of volumes led to revenues jumping higher by over 73%. When you're talking about the EBITDA jumped by 94 crore. Well, there was a one-off impact as far as the deferred tax was concerned, and on the back of that, profitability jumped up 4x. Margins, however, went up almost 200 basis points. So that was a significant development. End of FY25, the order book was at close to 5.6 gigawatt. And for the first time, the management of Suzlon actually said that they had the confidence, given the order book visibility as well as the order inflow that they were seeing. They have given an order inflow guidance, or rather, an execution guidance of 60% growth as far as FY25 is concerned. So they expect volumes to spike up by 60%, revenue, EBITDA as well as profitability, all expected to go up by over 60% on a pretty high base of FY25. Street clearly likes it. Suzlon was up over 10% at one point of time, cooled off a little bit from there.
Well, absolutely, Vivek. And we also spoke to the management. So let's listen into what they had to say.
Obviously, for the first time in our history that we gave a guidance saying that in FY26, we will grow by 60% minimum across the board. So that is not just giving a guidance of a number, and we are able to give a guidance for the first time, shows that we are now well prepared as an organization to see the future.
Well, some bit of recovery coming in the Nifty. The Nifty is now closing to the 24,800 mark. The mid-cap end of the market has also picked up marginally. It's trading with a gain of almost 0.2%. The Bank Nifty too, on the back of the gains that are coming in on the PSU banks, is up and away in trade today, up almost 0.4%. But that's all we have on this edition of Mid-Cap Radar. From Vivek, me, and everyone who put the show together, thank you so much for tuning in. Don't go anywhere because your stocks when we return.